Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Thursday. It's been a long week. A lot of movement, lots of trends that we've been following in 2015 got busted in the past week and a half. A lot of false misdirectional moves, and all of a sudden you look at everything or the charts right now, and it's right where we could be at a coin toss into tomorrow's jobs number. Lots of names have been bent and broken, but have found some lower support. Lots of sectors feel as if they lost upper momentum, but they haven't fallen apart. So will they fall apart? Even overseas, big overheated moves that corrected in the last 2 weeks, but the size of those moves, you can't you can't get too upset about it. You just have to have the right entries, exits, and the right system in place, which is why we use the 8 and 21 day, because if you're an active trader, you want to get out when something breaks the 8 and 21 day moving average, because that means that momentum has been lost. It's probably not trending, and you don't need to be just sitting in it. You could just trade it both ways. Typically, if you get rid of it at the 8 and 21 day, you could test the 50, the 150 day, and the 200 day moving average. Then the rule is if something gets below the 200 day for 3, 4, 5 sessions and doesn't pop back below it, it's not a trap, and there's real weakness. So I think today didn't really give us many clues on the action for next week, let alone jobs number tomorrow. So I was just talking to Freddie. We were trying to think about a song, just to play to get everyone a little bit in a good mood. I don't know if this will be, I'll just play it. Tell me if you know what it is yet. Can't touch this. So either shorts or longs, they're hard to touch. Anybody remember this song from way back in the day? My. We're going to put this a little low, and I'm going to go over some charts. By the way, when I was in high school and college, I used to MC bar mitzvahs and weddings, and this song was awesome. Because what I would do is, about 15 minutes into the party, I'd make a big circle. I'd get the bar mitzvah boy in the center. I'd make him do a show-off dance. And when we were like, stop, I would be like, bar mitzvah boy time. And then stop, daddy time, stop, grandpa time. And it was great because the song went on for a while. I had something to do for a good 5-10 minutes. And everyone had a good time. Everyone felt like they were a celebrity. And it was just one of the shticks that went along with the party. So as we lower this, I'm going to go over some charts. Or turn it off. So here we go with the SPX. There you are. There's the chart. It really doesn't tell you a heck of a lot. You have the outside day, which came in right here. So if you were riding this trend, which some were, okay, that pretty much was one spot to get out of some of your longs. And I remember I was long this whole week. I was long that probably 6-7 positions. We were above the 8 and 21 day. I was buying dips, and then on this false breakout, I said, let me reduce. Then remember we talked about this little area, which was I think 1092, 1094, broke below it, pretty much got out, got short, and then if you touched it, you got squeezed back to highs. And then right back at highs, I think we got neutral and we tried to buy some banks and think about what was going on. And then on this day, got out again, got short. And then yesterday, it was good. Yesterday was like a really good trade. We opened up, could have shorted more, broke below this ascending channel, and then you touched the moving average. You could have covered and made some money long. So now today, you had a little bit of a bounce back. So here we are, okay, sitting on the right side of this trend, and the question is, does it pop back above and then just put us back into the upper end of the range, or do we start to weaken a little bit and then get some kind of real corrective phase, because it's something that we haven't had in a while, and a lot of people are saying we should. So if you look at the SPX, this is really the first time it's on the right side here, and the chances are, does it stay on the right side or does it pop back up in here? So that remains to be seen, because if you remember with the IWM, it broke the trend first, right? This was your trend. It broke it here. And then almost like today is kind of like the day that we had after there where you weren't sure. Then you had an inside day. So you stayed on the right side, and then it broke support, and you had some more downside follow through. And now even this, it's trying to develop a lower pivot. Is this, a bear flag that, is going to continue to the downside and see the 200-day? Or, was this your corrective phase? If you got out here on the outside day or added there, now it's looking as if it might want to continue and break this lower pivot to the upside. We've seen that before. Bios also, talk about the side of the channel. Okay, and this was the break of your accelerated channel. That was a good short if you took it. Continuation to the downside. Then, you had the bigger ascending channel, which was right here, right? It broke below, gave you some follow through, retested, and now it's hovering in here and it's wedging. So is this wedge, which is typically a pattern of indecision, right? Is this down move enough for it to continue, or was, that it, and then all of a sudden it starts to reclaim the moving averages? So it's kind of a tough spot to be in. So, in individual stock land, obviously a lot of things are all not created equal. And there were definitely some things stronger than others today. So we came in today, Baba had a good earnings report. They changed the CEO, and I actually made money shorting it. Yes, don't tell who that I did not chase Baba at 88, 89. I was shorting it at 88 and made some decent money. So now the question is Baba back at this point? I would say it got a B to B minus for after earnings trading. But now at least we have a gap here. The question is, will it hold the gap? Will it let the moving averages catch up? And then at some point, will it trade over the earnings high and then continue and then maybe trade over this, gap pivot and act better? Stock is still in no man's land. It still has a heck of a lot to prove. Today, it was more of a short than a long after the open. And now we'll see if this gap goes unfilled to make it constructive to continue to the upside. The other earnings stock we talked about was Tesla. And I'm a little upset with myself because I was in the morning call. I'm like, I think 220 is a better buy than a sell. If it's any good, it should hold there. And then the stock held 220, went green, held higher, went up $5, and some guys had a rock star day trading Tesla. It gave a lot of opportunity. It's not for the faint of heart, but you know what? Either is trading. You can't touch this, or you can touch this, but you better make sure that you know how to handle it. So with that being said, if you go to the morning call express or whatever, you'll see that this is the line that I said should hold the 21-day. It's what held here, and it held, and right now it's back there. So I'm hoping it doesn't break through this street 240 and go now, but at some point, you show some commitment up here, and there could be some better action and more of a trade. I know it's a high valuation stock, but they gave it a pass. They didn't sell it off on the battery conference or news account, whatever the hell that you want to call that. Usually they sell an event, and then they couldn't sell it down here. So there's a lot of shorts trapped. Above this, it can continue. It broke the descending channel. It's been acting better, and it'd be nice to be able to trade Tesla back and forth according to patterns, because we had a lot of fun doing that during this major run, where if you look here, this was above the 821 day the entire time. So maybe this is the start of a new run. It hasn't been public that long, guys. It's still a new technology. It's still Elon Musk, so we'll see. All in all, you look at the historic run that took place from $40 up to 180, corrected to 260, corrected to 275, and now it just basically went sideways and cleared this descending channel, and who knows, maybe in its public life it continues, and if they do wind up getting mainstream cars and this and that and batteries and people get away from gas, it goes up, splits, and you could have a huge winner. But as of now, all you need to know, it's above the 21-day. It could have broken down, and it didn't, and might continue. So that's that. So that's back on the radar. And so is Baba. Baba's back on the radar. Hey, we got 2 stocks back. Yippee! Anyway, Apple, not really back, but kind of back, I guess. No, I guess that's a little bit too much to say. It's holding the lower end of this this support. It failed after earnings. That was your sell. And now it's down here, and the question is, will it reclaim the moving averages and pop back up? So if you're long it, be long it versus this 123.36. And if you're thinking it could get back, a little bit of traction, I would say you add to it above 126.75, which would reclaim the 50-day, and then maybe, with this long channel, that was enough to absorb this false breakout and then see what's next. But jury's still out here. Facebook also is trying to bottom. Trying is the key word. Not sure if you can touch this. Hey, I guess that song is a good genre for today. You know, can't touch this, or you can touch this. Anyway, this was your false breakout outside day. So this stock said, can't touch this, and then came all the way back in, and now it's trying to hold this lower pivot. And it doesn't mean it's like, you know, sky's the limit, blah, 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 blah. But all I know is if you did sell it here, maybe you try and rebuy this, because it's still, you know, it's still okay. It's still above the channel that it's been in for well, almost a year. It's still above this moving average, and it's still just, you know, corrected somewhat, not fully broken, just a little bent. Today, if you were at your seat, I was at the gym. Yelp had a big move. Okay, wow. If you were there and you saw a trade and perhaps knew the short interest and this and that, you could have had a nice little trade. This is the one thing, you know, I say when I go to the gym at lunchtime to refresh, because I'm up at 4:45, tweeting away, writing my note from 6:15 to 7:15, sending it to the editor, doing the videos, doing the charts, doing Benzinga, getting on the radio, trading the open. By 11:30, I'm washed. I'm spent. I'm jello, or something that doesn't think straight. I'm not saying jello doesn't, but anyway. And then I go to the gym, and I spend, you know, 2 hours midday from like 12 to 2, something like that, refreshing. I usually have positions on with stops, not to save me money, but just in case the trade changes, which is good, because if you micromanage some of these things these days with the computers, it could hurt you. But every now and then, if you're not at your computer screen, something like this happens and you miss it. It happens. Some people probably lost money shorting it, saying, I don't think this is real, and they got squeezed. But anyway, you look at Yelp, big move, cleared this in the gap. I don't know if it's a takeover or not, but when you have a stock, a well-known name that's heavily shorted, all the way from 100 down to here, to stay short, it's, you know, you're waiting for that, what we call the extra sauce instead of the meat and potatoes. The meat and potatoes of this short was already in the bag. Question was it going to be able to retrace? And that's what it just did. So it's the same thing with Twitter. If you're trying to short Twitter down here, you know what? After a big move down from the earnings mishap at 50, I think that you're kind of trying to get a little bit extra juice here, because I do not think that it's going to break this area. Who knows? Now it's going sideways, and maybe, you know, it gets a little squeeze above this and retraces back to that area. At this point, it's still broken, and I think it's not been public too long to have a takeover scenario here. But all in all, you know, if he's trying to short it, I guess just be careful. And if you're trying to be long, it's somewhat broken. You better not have too much size. As far as Amazon, had a nice day today with Baba. This is still considered a strong stock, right? It did not fill the gap, you know, as far as the earnings gap. It's been a little choppy, but today it had some commitment. It's back above the 8-day. So if you were looking for something stronger, Amazon is still considered stronger. Netflix also, after 2 wishy-washy days, all in all, now that you look at it, even though it had this, you know, failure here, it filled the gap, readjusted, another inside day. After a few days, it works off that candle, and then maybe if the market wants to continue to be constructive, it's going to need some leaders, and this is a potential leader. If it's going to fall apart, chances are this is not going to hang around. Google, Cooperman talked about potential them, you know, giving some capital back, and it had its first day. I don't know if it leads to another day, but, you know, here's your support going sideways. This was a start, but there's a, you know, heck of a lot of resistance there. So a lot of people ask me about my Redler All Access product. Okay, what that is, it's my morning note that I write every day. It takes me about 2 hours. It gets to editor around 7:25, and it gets sent out to anyone that wants it by 8:30. It has about 25 stocks, a list of them, my thoughts on them, what I might be looking at, trading, this and that, my disclosures, and then I also have a private Twitter feed that goes along with Redler All Access. I have a public one that has like 32,000 people on it, so it's hard for me to answer everyone, talk to everyone. And then I have my private one, which if you ask me a question, I'm going to answer it probably a lot quicker because it's a lot less to see. And then I do tend to talk about my strategies in my note when they execute. So if you happen to not be at your desk, I could give you a look at them. That kind of content is not always going in the public Twitter. So if you're in the public Twitter, I try and do as much as I can. But like today, I posted a link to yesterday, you know, when after the oil inventories number in my private Twitter, I said, remember guys, on this day, if you look at the USO, This day right here, this outside day, I posted in the private Twitter that I thought there was a 65% chance the bottom was in to maybe get long cover shorts, and then they had a nice ride. Then yesterday, right around 11:30, if you're in the private Twitter, you could see it. I said, guys, remember on this day when I said there's a 65% chance the bottom was in? Well, I said, well, here's your 65% chance the top is in, okay, at least for May. And then boom, you had a great day and a half short. So when I posted that link in the public Twitter today around 11:30, people couldn't open it, and I didn't realize it, and that's why that was there. But if you want to have all access with every dot, dotted and T's crossed, I think my note is $200 for the year. Divide that by however many days and months and weeks, and all that does is pay the editor and keep the lights on somewhat. Doesn't go to me. I do it every day because it's my plan, and it's what I need to do to be prepared. But anyway, what time is it? Ooh, 4:28. So we have the big jobs number report tomorrow. I think the best or most market-friendly report would be in line. Somewhere a little bit below 200 would probably be perfect, above 180 to 200, and we probably are within the same type of range, and most things that have a certain complexion stay that way. If it's 225 or above, chances are the TLTs that have been annihilated that finally had a bounce, what's it called, go back to lows, and if you're below 175, this probably will be testing the 200-day, which we'll see if it reclaims or gets rejected at. Remember, this was your spot to sell here. This was your spot to sell up here. So for those of you that shorted yesterday because everyone said we were in a bond bubble, you might get caught. Okay? So now you will see what kind of bounce back, and if it doesn't reclaim the 200-day in a session or so, or a few sessions, chances are there's real selling here. But here was your sell when the accelerated trend broke. Here was your other sell when that broke, and now it's just trying to bounce and figure out what's next. So I'll be around more tomorrow. I'll be trading from Short Hills. I'll be on the radio there. I'll be there as soon as I can, and we'll see what happens tomorrow. Hasn't been the easiest tape. There's been a lot of signals and a lot of spots to make adjustments. Hopefully you've made those and you haven't been caught. And again, if you're not seeing it, cash is always a position. You could have low gross, low net until you have more clarity. Have a great night.